Good morning, traders. Welcome to the Wednesday webinar. Sorry for being 2 minutes late here. We are ready to get rolling. Hope you guys are doing well here. Wednesday, November 14th. And let's see. I'm here. Okay. So just back from the Traders Expo here. Let's get you over here. Just playing around with that setting. So just back from the Las Vegas Traders Expo. It was really fun. Boy, I got to tell you about that one, guys. Yeah, crazy. So just type in, as I'm watching the comments stroll through here, just let me know everything's okay. Welcome back. Missed you guys too. Okay, yeah, just let me know everything's good. So yeah, Traders Expo was pretty unbelievable. I was lucky enough, they asked me to be the keynote speaker, and it was me and two others. I kicked it off, followed up by Ralph Alcampora, who's been in this business for 45 plus years. Awesome technical analyst, ton of respect for him. Known affectionately as the godfather of technical analysis. And then Tom Sosnoff was after the two of us, and Tom always brings the heat. So that was really cool. I didn't have enough time to put pictures together. Be sure to check it out on Twitter, Instagram. I have some videos. There was over 600 people in the room, and I got to tell you guys, it was unbelievable in terms of a few things that I want to talk to you about. The bearishness that's out there is rampant. It's palpable. It's rampant. And I just can't help but take pause to sit back and say, there are so many people calling for the outright destruction of this market. I enjoy the downside. I enjoy trading the downside of the market. I love volatility. But I'm just not there yet to say that we are going to absolutely implode. The bearish sentiment that I'm referring to is not only from the attendees, but most importantly, the presenters. And let's kind of look at it here a little bit and kind of take a step back here. So again, I'm just coming back. I cut my trip short. Both kids were sick. My wife was not very happy about it. So number one, and number two, I did cut my trip short to Vegas. I flew out yesterday. No, I flew out 2 days ago. Came back late last night. Just did the member video and we're rolling. So today's going to be a little bit more fractured than normal. So just kind of bear with me as we get life back to normal here. So talking about the markets overall, I want to look at some different wave counts here, different interpretations of what the market is doing. And the main wave count that I've been looking at here has been this interpretation, which is right here on my red count. And there's a couple people who have been kind of taking me to task a little bit on this potential count that this triangle is way too long. And I agree. I agree with that. So for now, it doesn't matter. I will kind of show you an updated count that I'm looking at. This count says that we have E-wave decline, support down in the S&P 2,700 to 2,650. This is the line in the sand for this count at about 2,602. Okay, this count is it's slowly becoming my not favored count here. So the one I'm going to focus on for right now is going to be right here. And let me just blow this out to the weekly and kind of show you what's happening. Before we even look at this wave count, just for a second, set the bearishness and all your concerns and your emotions and your hopes, needs, and desires of what you want to happen in the market. Set that aside and say, what do you see on this chart? What do you see on this chart? This is a monthly of the S&P. I don't see anything that makes me want to go and just sell all of my stock positions, just go short, and buy guns and water and gold and crypto and go up to the cabin. I don't see that yet. In fact, if you just look at this, the size of the correction thus far has been smaller than all three major corrections that we've seen since the 2009 low. 2010, 2011, 2016. This is what everyone is getting so fired up about. Now, does this have the possibility to manifest into something bigger? Absolutely. But right now, that's why I love charts. That's why I just love sitting back. Take a deep breath and say, what is happening on this chart? All I see so far is a failed breakout into the upper trend channel. We haven't even broken the April lows at about 2,500 yet. If that starts happening, then we can talk about a move down towards 23 or 2,200 in the S&P. I don't see that yet. Okay. Before I get into the wave count, again, I'd like to talk about this 200-day moving average interaction. And I said this on Fast Money last week, or I don't even know, 2 weeks ago. I don't even know what day of the week it is anymore. But the 200-day has been interesting since 2009 for a couple reasons. A lot of people will say, "Ooh, you broke the 200-day, short it," or you moved back above the 200-day, buy it. I don't find moving averages to be so linear or definitive, or saying if this happens, then you must do that. I think a moving average signifies an area of concern or an area, a pocket of expected volatility if you're coming around it. You know, this is a market that was extended and is coming back into its range, its average. That's all a moving average is. It's just simply an average. It's mean reversion. It's coming back, okay? So when you have a market that's above, below, or at the 200-day, that tells you different things. I'm not a huge moving average fan. I'm really not. But I think the market has been defined by this 200-day, so I want to acknowledge it. And I think I have the chart. Hopefully I have this chart. I do. This is the exact chart that I sent to my producers at Fast Money. And this is the S&P going all the way back 2009 low. And what I'm saying is, once there is a period of interaction with the 200-day moving average, that is a period where we're simply having mean reversion. Okay, doesn't mean go short, doesn't mean go long, just means it was extended and it's coming back into the range. And the amount of the periods, the amount of trading days that will experience this, let's call it interaction with the 200-day moving average, has been rather patterned. So the first time I would say there was a real attack in interaction or mean reversion to the 200-day was back here in 2002. It lasted 92 daily bars before we eventually got back above the moving average and the market went into a rally. So 92 days. 100 days in 2011. These are just tests, okay? I wouldn't say they're interactions, they're tests. This one, okay, got real quiet, real quiet. This looks like the top that we had just going into January. Then we got the big drop here, 144 days before we cleared the moving average. Okay, so what you're seeing is 92, 100, 144. And I would say we've begun this next interaction because we definitively broke it here on October 11th. So far, guys, we're only 25 days into a period of 200-day moving average interaction. So if you just want to be conservative, considering it was a 92-day interaction, 100-day, and 144-day, let's just put 100 days out there. That's going to be March 3rd. So is this anything that says, oh my God, the market's going to absolutely crash? From a technical point of view right now, no. From an Elliott wave point of view, can we count a potential 5-wave move up and this is the end of a major bull market? Yes, potentially. My only point is right now, this is no different than the other 4 200-period moving average interactions on the daily. So I just want to temper everyone's bearishness. And coming back from this Traders Expo, I was just like, oh my God, everybody's so certain the market's going to crash. And it may. I don't know. I can't predict the future. But just gauging everyone's sentiment. I'm like, holy cow. I mean, really, yes, we have a Chinese tariff war. Trump is trying to right some trade wrongs that have been that have allowed to have been in place for a long period of time. I think there's a lot of things from that point of view that he's doing well. No one's like trade war, but let's balance trade. Let's bring the Chinese middle class into the consumer division, then into the consumer world. And then can you see what's going to happen to this global economy? So I don't know. Earnings were a little overstated going forward next year. We got higher rates, higher cost of capital. And they're saying, whoa, back up here. You've got to adjust your earnings expectations. And that's basically all that's happening right now. Does it have the potential to move into something greater? Absolutely. But I just want to say I'm not seeing it yet. So the wave count that I was looking at here, let me get off the weekly. Okay. This monthly channel just kind of triggered that whole little diatribe. So I apologize about that. I'm just looking at questions here. Great question there, QWER. What's your feeling on the inverse head and shoulder? I'm gonna get into that for sure. And that's another thing that a lot of people are talking about, that inverse head and shoulder, and that's a possibility. So yeah, we'll definitely take a look at that. Good morning. Platform I'm using is Motive Wave, and we have it's a very good Elliott Wave software. If you're interested, we have information on our website here at Trading Analysis. There's a specific trading analysis version we use. If you're into Elliott Wave, it's wonderful. Just go up here to our partners page, and it will give you my trading platforms, the computers I use, and if you have any questions, because I see a lot of people asking me about that. I use Thinkorswim to trade, Motive Wave. I'm using a Falcon computer. That's my actual computer right there. That's the Todd Gordon bundle, and that's that. Okay. All right. So back to the wave count. A possible wave count is this. Possible. Actually, no. 3, 4. Yeah, that's right. That's right. Okay, let me just work through this one. Let's get off that to the daily. No, we're going to be working. There's one that I wanted to show you. That's the top count. Okay, here we go. This is one possible interpretation, okay, from the 2016 low. This period right here, I'm going to get into some Elliott Wave specifics. Once we came out of this period of interaction with the 200-day moving average, this right here is up for interpretation, whether this is 1, 2, or if it's some kind of running flat, which went 1, A, B, C for 2, and then we go. That's actually going to have some different implications. So if we go over here to format, I just want to clean that up. I had to change my charts over to white for the presentation for Vegas. But this is a possibility here, looking at 1, 2, 1, 2, 3, triangle 4, up in 5 to complete wave 3. This wave 3, which is setting up this blue 4 correction, is of the same degree to this wave 2 right here. Okay? So if that's a possibility, we need to look at the depth and duration of this wave 2, because this wave 4 will be of the same degree. So as we scroll in here, scrunch in, zoom in on the daily, here's what's happening. This decline has been interesting from October 2nd. It can be counted as a 5-wave move, and here's how I have it labeled. Okay, it could be 1, 2, 3, 4, 5, back up in B. Now, if this is in fact a 5-wave move, that's going to require this correction to unfold over the next month or two, just like this. Let me go like this. Let me make it of the same degree so it looks the same. Degree is the minor. So let me just go like this, degree minor. Okay. So a zigzag unfolds as 5 waves down in A, 3 waves up in B, and then 5 waves down in C. This is the model. This is one of the 3 Elliott wave corrections, one of the 3 corrections according to the methodology Elliott wave. Your 5 wave move in A is right there. There's your model's 5 wave move. Your 3 wave reaction up in B is right here, right there. And now what we're looking for is another 5 wave move down in C, because there's your 5 wave move in C. So if that's the case, if we are going to get a C wave decline, that's going to bring us down to 2,500. We're at 27.22, and I think the futures are up here a little bit. We do have room for a 222 point plus drop. Okay, so we could see selling, but again, within the context of the wave count that I just gave you, it'll pull back to here, and then it will rally to new highs. It could. So I also need to, at this point, and I'll come back to this inverse head and shoulders, before I start telling you this is exactly what's going to happen, it is possible, guys, that we're not going 1, 2, 1, 2, and in fact, we could be looking at a long-term top, which is going to be 5 of 5 of 3, okay? It could be the case. And if that's the case, the trade that I'm going to set up with my members, which I'll take you back to in a second, is going to be designed to go from 2,700 down to about 2,500. If this count plays out, which is saying that we have a long-term top in play, and I'm wrong, the decline is going to be catastrophic. It'll be what everyone's expecting because the sentiment is so bearish right now. But it will be at least a retest of the area of the prior fourth, which is at 666 low in the S&P. That's what the wave. That's what this wave count says. Okay. I'm not ready. I'm not ready to go there yet. I'm just not. But what I am ready to do is to look for the possibility to get down to 2,500. So this is the count that I'm looking at now. It's going to be down in A, up in B, down in C. As we get off the daily, down to the 3-hour, we'll go 195. Remember, the zigzag is going to count as 5, 3, 5. I want to also make the point, guys, that it doesn't matter if this is A, B, or C, or if it's 1, 2, 3. Okay? If in fact I'm wrong and this is the wave count top, then you're going to have a 5 wave move down in wave 1, you're going to have a 3 wave move back up in wave 2, and you're going to have another 5 wave move down in 3. This is basically the exact same pattern as the zigzag. 5 down, 3 up, 5 down. 5 down, 3 up, 5 down. If it's a top, exact same thing. This is the wave count that says we're at the top. 5 down, 3 up. I was looking at one of 2 fib zones to hold as resistance, either right here or here, and we're going to drop. It's the same implications. 5, 3, 5, but then we continue lower, and it's the end of the financial world for the foreseeable future. So if we are operating under the premise that in either situation, whether this is C or 3, we should get a 5 wave move to the downside. So as we get off the 195, and let's get down to like a 60-minute, and I'm going to stop here in a minute and take questions. If it's in fact a 535, you can't go out and short right now, because even if this is the end of the financial world for the foreseeable future, we have a completed 5-wave move down from the move that began on November 7th. You can't short into a completed 5-wave move down. You have to wait for the correction back up. 2750, 2775. Shouldn't get over 2790 in any kind of bounce. So the point is, you can't just go out and sell the first bounce. From my point of view, the way I'm going to be setting up with my subscribers is to drop and try to get down to something around the 2500 mark. I haven't set up the wave trade. As I said, I just got off a plane late last night from Vegas. I will be working through this with my members, but something that I probably will be doing is, we'd have to look at the date, but let's say we want to do this into December. You could go and do something like I might be doing something like buying a 2700, buying the 2700. 100 points is going to be a little wide. Doing some kind of put butterfly, unbalanced put butterfly. $100 wide is going to be pretty expensive in December. That's $1,100. That's not too bad at all. Okay. So if I go over here to analyze trade, this is what a traditional balanced butterfly would look like to get down towards the 2600 level. I don't know if I want to go straight down to 25, but all I'll do is I'll adjust this a little bit, and you could bring in, drop the upper put. If you go like, drop this 25 points to 26. I don't want to do that. I want to do the other side, sorry. 27. What if we brought this upper one 25? What if we brought this guy in 25 points? Okay. So now the cost goes up from 11 and change to 13, buying the 2700s one time, selling the 2600 two times, buying the 2525s one time. Now my max loss on the top side is $1,300 on a one lot. Profitability exists all the way up there to the max potential profit of 8,600 at 2,600 in the S&P in December. Profitability begins to go away as we move down towards that 2,500 mark, so I probably want to adjust this a little bit. But that's a nice range in here to try to get to. You could also do an unbalanced. You could do a broken wing, I'm saying. You could go like this and go custom. You could buy 2 here, sell 3 in the middle, and buy 1 down below. Now you have more of a kind of a broken wing and unbalanced look. The cost goes up to 3,500, but if the stock market collapses and crashes, you make 8,900 bucks. Okay, max potential profit would be 1,600. The cost of the trade double. It costs about $3,500 per contract. And just keep in mind, you could do this in the SPY at 1/10 the size. You do it in the SPY, it'd be 350 bucks. Okay, so it's a way, to say, okay, we could sell off. This could be the end of the financial world. But if not, if we are just doing an ABC pullback, like I'm proposing here, where are you? Okay, I got to get my stuff straightened out here. If we are just doing an ABC pullback, and you're going to get the move down to 26, 25, if you look at the angle, like how long should the C wave take? It could sell off through November and December, and then what if we get a bounce? What if we get the bounce here? the profitability would exist from, say, 2650 to 2560. Obviously, 2600 would be the sweet spot. You make 16 grand on max potential loss of 3500. If you get the bounce back up to 26, volatility comes out as you're getting towards the end of this trade, and that's when you can make some serious money. So that's kind of what I'm looking to do here on the downside. If I'm wrong and the market just falls out of bed and everyone's right, I make money. If I'm right and we get down to 26, 2500, bounce up to 26, and I make more money. Okay, so that's just kind of the way I'm looking at this market right now. All right, let me just take a look at some of these comments and questions. Yeah, TD, that's right. TD Ameritrade. What are you guys talking about? A can be 3 or 5, of course, but W is always a three-wave structure consisting of ABC. Okay. In regards to what star? Yeah, the best thing to do, he says, Todd, can you please point me to some resources about options? I mean, they're all over the internet, but just come in and watch this trade. Just like I do right now. We have a beginning options course at tradinganalysis.com. I trade live every day, and I kind of walk you through slowly as we explain with our members. So just come in. Just come over to Trading Analysis and just watch this go. When you guys are asking about wave counts, tell me because there's like a 30 or 45 second delay, I don't interact as much as I should, and I actually need to kind of improve to get the buffer out or something. I'll figure it out as this show evolves. But when you're asking about a wave count, tell me time frame and symbol so I can definitely jump in there for you. Okay. So from there, I had a really interesting conversation with Ralph Akampora, and while Sosnoff was speaking, he and I were kind of looking at the count, and he was saying, there's a massive head and shoulders right now on the DAX, and I certainly see it. And the head and shoulders he's looking at is here on the left, head up there on the right, shoulder on the left, head right. And again, I just step back and I'm looking at this and I'm saying, okay, it's definitely a serious decline, but relative to what we saw in 2011 and 2016, not anything alarming yet. If it starts breaking the invalidation of 10,432, yes, possibility. The wave 4 low at 8,600, yes, possibility. But I'm doing everything I can to stick with the bullish count just because I want to be proven wrong on the downside. Look at the German DAX. Look at this. Okay, we just did A, triangle B, down in C, into a bunch of fib support. If we hold, there could be a pretty spectacular rally. China has been a major concern, right? China has been a major concern. Take a look at FXI. FXI, wave counts aside, we are off the lows. The lows are put in here on October 29th. It's now November 14th. We've made a higher low, and we're beginning to move higher. This is the FXI that tracks Hong Kong's largest corporates. Okay, EEM is another one, emerging markets, which is heavily China. I don't have a solid wave count on this one, but just a very nice zone of fib support right in here into the 38 region, same thing. We just made a higher low in emerging markets, and we're beginning to move higher. And that's in the context of crude oil falling apart. OPEC issues, crude oil's down at 56, and we're not seeing emerging markets, which is generally correlated to crude oil. We're not seeing emerging markets really get hammered on this recent down leg in crude. So for all those reasons, I'm like, okay, Europe's largest stock market looking a little supported. Emerging markets and FXI not confirming, especially in light of what's happening in crude oil. And you sprinkle in the overwhelmingly bearish sentiment that I experienced from both presenters and attendees at the Expo. I'm just saying, okay, let's hang on here for a second before we say it's all over. Okay, yeah, invested PD is a great way. Yeah, I mean, Tasty Trade, of course, they're doing a ton with options, and that was kind of my speech on that. I'm going to kind of wrap it up here. It was interesting on the Traders Expo where they brought me in as the first keynote. And I was preceding Ralph Acampora and then going over to Tom Sosnoff. And I was talking to Kim Gethler, who's the head of the Traders Expo. I said, it's interesting the way you do that because I'm obviously a chart-based trader. I mean, I know fundamentals. I always have a fundamental backdrop of what I'm doing. I've been doing this for, oh man, I first became a professional trader out of school 2001 and traded through school. My style has basically been unchanged. I added Elliott Wave in 2004 or 2005, but it's been a combination of Elliott Wave and options, for a good period of time. So I'm a chart-based option trader. Ralph gets up there, and Ralph is just a purebred technician. Tom, on the other hand, and the whole Tasty Trade approach is to throw the charts away, look for expensive volatility, high implied volatility, and expect mean reversion. And his point is implied volatility is mean reverting, meaning implied volatility does not trend, which is correct. Price does trend, implied volatility does not trend. So what I mean by that is, take a look at Apple. The price of Apple can trend, but the implied volatility, which is here in purple, does not trend. It range trades. So the option trading that you'll see from Tasty Trade is to basically find the high implied volatility, sell that, expecting for mean reversion back in IV. I mean, it's fine. But my point, and kind of what I said in the speech, is why not take it another step further? And if you have an opinion of the underlying based on what the chart is doing, put it in the context of where implied volatility is, whether Apple's volatility should be sold for mean reversion, but you can also kind of couple that with a directional bias. And I think it's really difficult to trade without an understanding of what the underlying market is doing. And that's why you can kind of adjust the strikes here a little bit within the context of what's happening in the S&P. I gave you a 3 or C implication down to 2,600 in the S&P. I'm not sure, but my two top game plans going, oh shoot, I wasn't showing. Let me show that chart again. It doesn't matter, but you know what I'm saying. Implied volatility right here in purple, range trades, where price trend trades. Price can trend, implied volatility can't, okay? But as I said, if you sprinkle in some directionality and have an understanding of what the underlying market may be doing, I think you increase your conviction. I think you decrease the amount of the frequency of trading, which is good. Keep that commission dollars down. And I mean, I think that's the way the market should be trading. Options are wonderful. They're a great way to more efficiently use capital. But I think it really pays to have an understanding of what the underlying is doing based on a good, solid technical analysis, as well as fundamental implement. Okay. So from there, we'll just kind of spin through. Let's take a look at bonds. That's kind of the whole reason for the thing. And who knows? They're actually gone pretty quiet recently. We've fallen into consolidation there. Not much happening there in the 30-year bonds. I do have a completed 5-wave move down in the bond market. We're not getting any kind of upside indication yet. So bonds aren't giving us too much. See what the dollar's doing. I'm going to bring Alex on in the near future. Alex runs our Forex business. So it looks like we've begun to push above in the dollar. We could be on the cusp of a break in the dollar. If you start getting too much above this high, I'm going to go ahead and take this wave 2, place it here, and say we are on the cusp of a major dollar wave 3 rally, which that would certainly add a lot of volatility into this market. Natural gas has been a big mover. So far, I'm going to just count this as just a very rough preliminary wave count. 5 up, triangle B, and if you do a fib projection, that's going to be a 4.75, which thus far has been resistance. If we settle back in a corrective manner, we could attack the quality, which is at 6.66. Okay, that's in crude oil. There's a lot of talk, and I'm going to save this for members, a lot of talk about the 200-day. There's so many different markets that are above and below. Most of them are below the 200-day moving average. Apple just gave it up. Apple's at a really interesting point here. Any lower, and I'm going to have to get rid of this wave count below 190. I think Apple at 190 is key. We have the 200-day here. You know, it really hasn't broken the 200-day yet. Apple's shown some pretty good relative strength, but it's coming back. Netflix is one that I think is showing some really good relative strength with this higher low that it's just put in. Looking at 3 waves down in W, so that'd be an ABC, that'd be a running flat, actually a expanded flat. ABC up in X, and then another ABC down in W. This is a trade that I'm actually looking at buying 350s 1 time, selling the 380s 2 times, and buying the 400s 1 time to get up into this 380 to 400 mark. Cisco is showing pretty good relative strength lately. Starbucks is doing pretty well, which is right here. Starbucks is doing great. Finally broke the long-term trend, so Starbucks is definitely on the move after this consolidation. Lululemon is another one that acts very well. I think Tesla is going to hit the 420 mark. I think there's a ton of bad news that's been thrown into Tesla. The relative strength that's shown recently, all the bearish stuff that you know about Tesla, set that aside. If the market stabilizes, I think that looks like a good upside move. Facebook just can't get out of its own way. Facebook is terrible. I'm going to be working bearish counts on that. So too early to tell. Too early to tell. I don't know what the market's going to do, but I think from the S&P's point of view on that 2,500, I think we're pretty clear. Okay, guys, we're going to leave it there. Be sure to check us out at Trading Analysis. We are right here at tradinganalysis.com. We offer, obviously, live trading services, education, analysis, trade alerts in stocks, stock option markets. I trade my live capital all the time. And another thing that I'm going to be doing is I'm going to be building a longer-term portfolio. And I've been discussing this with my members. I funded a new account, this 3-2 account, with $100,000. And I got some sign-on bonus here. So let me just cut over to my screen. Give me 1 sec. I funded my new account with $100,000, and I'm going to be building a longer-term portfolio. It's not going to be an active trading service. We're going to stretch it out. We're going to build a portfolio, attempt to outperform the S&P. There's a lot of money managers who are going to get skewered in this volatility, whether we go sideways for a period of time or if we drop. So I think it's time to kind of build this out. This has been something I've been wanting to do for a long period of time, kind of building positions. It'll be included as a member at Trading Analysis, so no extra cost there. So be sure to sign up and watch us as we kind of build this portfolio, trade it live capital as I do all the time, and hopefully expose some of the money managers out there who are going to get chopped up and are getting chopped up in this crazy, crazy environment, because this is a trading market and volatility is up for sure. VIX was at 12 and 11 and all that ridiculousness. Looks like we have a new floor now. You know, it looks like 16, 17, 18 is that's the new low of the volatility index. And that's going to make sure that the traders will kind of emerge, come to the top of the pile here. So I think there's big opportunities going forward if you've been working on your trading skills, and that's what we're going to be doing here. All right, guys, hope that helped. Sorry it was so scattered again. A little bit of crazy Vegas brain after I was only there for 24 hours, but Vegas is always intense, and new baby's great. Eden, she's all right. She's losing a little bit of weight, which is normal. She lost 10% of her body weight, a little bit more, and that's to be expected. But the doctors are kind of just making sure that her calorie intake is up. Boys are adjusting. Coming up on Thanksgiving, I'm heading up to Saratoga next week. So we're going to be moving up there, my full-time office, some stability. I'm looking forward to it. I think I'm on Fast Money CNBC tomorrow. So I'll be on 5:10, 5:15 doing the technicals, I believe. I think I'm in the schedule. And other than that, that's everything else that's going on. So thanks for joining us. Thanks for joining us here. Oops, I forgot to... Wish you a good rest of the trading week. Market opens in 2 minutes, so as I said, watch it. Volatility's up. Understand how to define your risk. It's certainly rough going out there right now, so be careful, all right? Leave it there, guys. Have a good one, and I will see you, members. We have our member webinar today at 10 a.m., so see you guys in 30 minutes. If not, I will see you next week. Will I see you next week? Day before Thanksgiving. Probably not. Probably not. Might have to catch you in 2 weeks on the 28th, okay? Until next time, see you guys. Good luck.